Hello everyone, this is Tim Davis coming to you guys from the Bullish Bears team. Today is Sunday, October the 21st, and this here is my video on my long-term trade ideas update. Told you guys I'll be doing this weekly, just to give you guys my current outlook about trades that I'm currently in, trades that I may have closed, and stocks that I may be currently looking at. So this is my weekly update of my active trades. And right now, as you can see, these are the trades that I am currently in. And I did something different this week. I wanted to show you guys the actual positions that I was putting on in case anybody were curious about how I was actually playing this particular trade. So the trades that I'm actively in, as you'll see, they'll be, if I'm bullish on a particular trade or stock, it'll be highlighted here in green. It'll all be green. And if I'm bearish on a particular position, it'll be in red. So right now, my active trades are GLD and CNTTF, which is a marijuana position. And you'll see GLD twice because I entered a second position on GLD this week. And I'll show you guys the reasons why I did that. And the other active trade that I'm in is XLF. I'm bearish on XLF. And if you read through this, you can see my entries on, give you an example for GLD. My stock price when I entered this position was at $114 a share. My first target goal on this is 119, and we're not quite there yet. My original entry date on this particular position was on October 11th, 2018. And I added this. This is something new. This is the type of trade that I entered when I entered this. Entered a 114/111 put credit spread expiring on March 29, 2019 with a break-even price of 113.09. So pretty much what a put credit spread is, I'm saying that between now and March 29th, GLD will not drop below $114 a share. And if it does stay above $114 a share by expiration, then what it will end up happening is that the credit that I took in selling this particular spread, I will be able to keep that credit. Okay. To find out more for that explanation, you guys can always follow me in our swing trade room, and I will be there to help you understand this credit spread and how it actually works. But pretty much I sell this particular put spread saying that the price of GLD will stay above 114, and the price that I sold it for, if it stays above 114, I'll be able to keep that credit by expiration. And so far, it's working out pretty good. My break-even price would be 113.09. CNTTF, I'm still buying shares on that one. When I first entered this particular position, it was at 857, and since that, since the news about Canada being completely legal with marijuana this past week, as you guys, if everybody paying attention, marijuana market started to pull back. The scenario type that a lot of people say, you'll hear people saying, sell the news, buy the rumor, sell the news was pretty much what happened. So that it's in pullback mode right now, but I'm still long-term bullish on the sector, so I won't be selling my shares. What I'll be looking for is a pullback. Hopefully a substantial pullback between now and springtime, and then I will end up buying more shares. So I'm still bullish on CNTTF. And the second position, I entered another GLD position, and this one I entered on the 19th of October. And this is a debit called debit spread. It's a little bit different from the credit spread. So pretty much, I've actually purchased this with the hopes of GLD rising to my 119 first target. That's what I'm looking for. 119 is my first target. So I entered my original entry date again was on October the 19th. Type of trade I entered was a 121.117 called debit spread, expiring on March 29, 2019 with a break even of 118 anytime. So as soon as gold gets to 118.51, anything above that, it'll be profit for me. If it does get to 121, that's where I would take max profit. I will be able to collect max profit. But more than likely, I probably won't be in a trade that long, depending on how the position looks. I'm looking to get to 119, 119 to 120, where I will probably sell this position and take the profits that I have made off of this particular move. So I'm still bullish on gold. Now, my bearish trade I got here is XLF. XLF, I'm bearish on this one. And the stock price at entry for this one was $26.70. My first target goal is going to be $26. So I'm looking for this to pull back at least $26. I'm going to show you guys what I expect to happen, or what could possibly happen. I'm going to look at the chart. Could be ready to retest the $26 low, which is why I set that first target at $26. The original entry date on this one was October the 19th, 2018. Type of trade entered was a 27.25 put debit spread, expiring March 29th, with a break even of 26.31. So if price breaks down below 26.31 is where I'll start making profit. 26.31 would be my break even. Okay, moving on to my watch list. MJ, which is also a marijuana stock, marijuana ETF. I'm still bullish on the marijuana sector, so that's also going to be on my watch list for pullbacks for possible entry. Disney guys, back on my watch list. Disney looks pretty strong for the past week. It has earnings coming up in November the 8th, so I'm thinking about a trade that I can put on for that one to possibly take advantage of a bullish move. And everything else you see in red is the positions, ETF, stocks, whatever, that I'm still bearish on. Okay? All right, now let's look at a couple of these charts. We're going to start off with XLF. We're going to start off with XLF. All right, let's start off with stockcharts.com. This is a weekly chart of XLF dating back to 2015, I'll say. And what I'm noticing here is that there's a possible chance, and I know how the market goes this week, but this looks like it wants to roll over. That's just what it looks like to me. It looks like it wants to roll over, possibly. So we'll see how that pans out. This action here was what happened in the beginning of the year. January, we made a nice high of $29.95 on the XLF. Tried to rebound, couldn't get quite back up to $29.95. Stopped at 29 bucks. This was around September, and we started to pull back since then. We went down to 26.03 here. That was back in September. I believe it's a possible chance we can retest this low, which is why I put on that put debit spread. I think we can retest this low maybe this coming week of $26, and after that, who knows? We could get a bounce off of this 100-day EMA. We'll have to see what happens. But I do believe that as a possible chance, we can retest this 26.03 low sometime in the coming weeks or so. So if we do get to that low, then I'll probably take my profits depending on what happens. If we break straight through this 100-day moving average, then it's a possible chance we can head down to the 200-day. So we have to keep an eye on that. Okay, let's take a look at it on TrendSpider. If I can get my cursor to move for me. We'll type 1 second, folks. Bear with me, folks. My cursor just got stuck on me. Nope. No, it didn't. Okay. All right. Here we go. All right, here's the daily versus the weekly chart on XLF. This is the daily chart, and as you can see, what I'm looking at here is how there's a cluster here. Price broke through this trend line here. It's consolidating here below this trend line. What I believe is a possible chance we can dip back down to this trend line, maybe break this one and retest area of $26. So that's what I'm looking for. See if that happens this week. If so, it'll be a good, pretty decent trade that I put on. All right. Now let's take a look at XLF and think of swim. Let's do all this. All right. One thing you'll notice, chart far to your left is the hourly. Chart in the middle is your daily. Chart on the right is your weekly. On the hourly, you can see it's been struggling to get back above the major moving averages. It's been struggling to get back above these major moving averages. And I think that struggle could continue, so we'll see what happens. Every time it gets up there, and only it's been got up there once here, and it bounced right off of it, and then like it's ready to pull back again. So we'll see how that pans out on the hourly chart. And on the daily chart, we are hovering below the major moving averages, which is why I say I think if we get some type of rally here, we'll probably butt up against these major moving averages and probably retreat again. So that's what I'm looking for, to retreat back to this low of about $26. So that's my outlook on XLF. Now let's take a look at GLD. All right, here's GLD. And as I'm gonna start with GLD. Look at this weekly chart, because this weekly chart shows some it shows a good setup. I'm gonna highlight a couple things on this weekly chart here. Let you see what I see. All right. For years, gold has been trying to rebound. For a couple of years now. It's 2016. So you'll see a low put in here of around $100 GLD. Then you'll see a move up to 131, then a pullback. And we pull back to this level here. Then you'll see a nice move up, and then you'll see a pullback again to this level here. Now, I think this is where we start to rebound again, so which is why I'm so bullish on gold. So I think we go from this level to that level. Oops, could not do what I wanted to do there. Yeah, but I'm thinking we get a bounce here, like we did there, and I think we get another bounce here. So let's see what happens. And there's a possible chance we can be headed back up to try to retest that 131 high. We'll have to see how that works out. But I think I really feel bullish on gold right now. All right, that's how we're looking in think of swim on GLD. And if we look at the trend spot on GLD, trend spot on GLD, I told you guys last week, when I saw this break above this trend line, I knew I was in like flame. And that was a good move. And then we're back above the major moving average, 50, back above the 50 EMA, which is a great sign. And so we should be trickling around in here, maybe a couple of weeks, couple of months. I really think we're gonna head back up to this 120 over the next 2 months. So we'll see how that pans out. So we're looking pretty good there. And the longer term aspect, looking at it in stockcharts.com. Like I say, we got these moves in here. Pull down there, went higher, pull back here, went higher. So notice the higher lows, folks. Notice the higher lows after these pullbacks. 100. Then it got a rally and pulled back to 107, not back down to 100. It's a high low. Then back down to 111, another higher low, higher than 107, higher low. You love to see that over time, these higher lows form. Normally, you got these higher lows that form like this with some consolidation around the area. Normally, that's a sign there's going to be a huge move back up. So we got two higher lows, one there, one there. Gold's going higher. Okay. Last but not least, take a quick look at CNTTF. So it was a marijuana stock that I was that was kind of like put on to by or it was on CNCBC, something like one of the channels. And TTF. Can't Trust Holdings, and I can't even, for some reason they won't allow me to pull it up in TrendSpotter, but I can pull it up here, CNTTF. And this one, I mean, I like this chart set. Now, what I'm expecting, because after we didn't have that big move in marijuana stocks for quite some time, up until it was legalized in Canada. Now, I'm expecting a pullback. So I am expecting a pullback. And what I'm hoping is that we pull back some of these Fibonacci retracement levels, hopefully around the 61.8, which will take it back to around a little bit below $8. Hopefully that can happen over the next coming months or so. If we pull back to either one of these fib levels and we start to consolidate, I'll be looking to buy more for the next leg up. All right. So with that said, I think that's everything I wanted to review. Now, one thing I'm going to, for those who are not familiar with these spreads, I'm just going to show you guys some things that Thinkorswim does for you to help you see the probabilities and the possibilities with these spreads. Now, for my XLF, I told you guys that for XLF, let's show you guys XLF as an example. I bought a put debit spread for this one, and my strikes are $27 and 27 by 25, which means I pretty much I'm bearish on this particular stock, and I'm looking for a move to go lower. So I actually bought a put spread because I'm more bearish than neutral, and I believe that the price will go down. So instead of me getting a credit spread, I actually bought a debit spread with the hopes that this stock will drop below $27 and hopefully about to 26 before expiration. So as long as we stay below 27, I'll be fine. Get to 26.31. That's my break even. Anything below 26.31 would be nothing but pure profit. And a good thing I like about, let's see what strikes did I get again. Good thing I like about Thinkorswim is it breaks it down for you, let you know what your break even is, let you know what your potential profits are as well. So let's take a look at that real quick. So 27.25 put spread is what a debit spread is what I got. So if you come over here, we're already on March 27. If I was to right click here, click sell, go up to vertical, and I'm going to change my strike. So I'm actually selling the 27s. I'm sorry, get that back. Let's right click on the axe because I'm actually, this is going to be a debit spread for me. It's vertical. So I'm buying the 27s and I'm selling the 25s. Let's just, for the example, let's just use, let's just go with 3 contracts to show you what that would look like. Come over here to this area where it says link. If you right click here, go down to analyze trade. What you can do here is you can learn a little bit more about your break even and your possibilities. Let me get rid of this first one here. All right. If you come over to this, to my right, when you see me highlighting this area over here, this little block, click on that. Go to set slices, go to break even, go down to your expiration of 3/16. And this tells you what your break even would be from now up until March 29th. And this moves around to you guys throughout the time of this trading. Sometimes this may change. But my break even right now would be 26.31. So my hope is that yeah, my break even is at 26.31. So anything below 26.31 is where I would actually start to make money on this put debit spread. Okay. Now, if we go back here and we click on confirm. Here you can see what you can possibly make with this trade if the price continues to drop. All right, my break even right now is 26.31, so it doesn't have to move that much in order for me to start making money. With a regular old put option, let me show you guys what the break even will be on a regular old 27 strike put option. All it has to do is move this a little bit from where the price is now, 26.67. Just moves down to 26.31. I can start making money, which is better than buying a straight put. Okay, because I'm gonna show you why. All right, my max profit for these 3 contracts would be a total of $393. My max loss, which is how much it cost me to get into this trade minus my commissions, 207. So I'm risking till 207 to have a potential chance to make 393. And my break even again, like I said, is only 26.31. So if we can get down to $26, I'll probably end up getting out of this trade, taking the profits, whatever profits I can make it $26. Now, so my break even on this spread is 26.31. Now, if you're really bearish on this and you decided to buy a 27 strike put option, it's a straight put by itself. This is what it would look like. So let's say we decided to buy that straight put option like by itself. Firm and send. Look at your break even now, 25.60. So you got to go all the way down to 25.60 before you really start making any money. All right. Now let me change this out to 3 contracts. Now, I guess the plus side here, if you can make it down to that 25.60, you have those 3 contracts, you can have a chance to make, potential to make a lot of money. Your max loss would be 420 minus your commissions, what your cost to get into this trade. But your max profit is pretty much not capped. You can make, here it says $7,680, but it could go even higher than that if you break down to that level. All right. All right, you guys. Hopefully, you guys learned a little bit just on spreads and your break evens and things of that nature. If you want to find out more about some of these spreads that I normally put on, follow me in our swing trade room. And I'll be monitoring these trades throughout, the coming weeks and months to show you guys how things are panning out. And when I exit this trade, you'll know. Because each week that I do a video, I will continue to update you on the trades that I'm in. If I close any trades, you will know when I do those updated videos. Okay? All right, folks. Until the next video, it's Tim Davis from the Bullish Bears team signing off. Again, visit our website at www.bullishbears.com to find out more about us, and to learn about our trade rooms where a lot of the action happens throughout the week. All right. Have an awesome weekend, guys. I'll see you guys on the next video.